everyone. Good morning. You're watching Market Fatafat on ET now. I'm Mubina Kapasi. Markets, well, we are seeing a bit of a tempered move after the massive rise that we saw yesterday. So it's 0.4% gone for the Nifty. Still sub the 11,600 mark. The Sensex as well is losing in triple digits. 128 points gone as we speak. Broader markets not faring better either. 0.7% for the small cap index. The show is, of course, all about flagging off all the individual movers and shakers in trade. But before we do that, here's a interesting conversation we had with Atul Suri of Marathon Trends to understand what will lead the next leg of the rally, what could be an ideal time to invest in the markets. Hear out what he had to say.
I personally think that it's a punt. There is a feeling that there's going to be massive PSU divestments, and that's the kind of murmurs that there are on the street.
Totally.
And that's a punt. That's a faith rally. However, I don't think they are compounding stories or they're backed by earnings or anything that is there. If it doesn't happen with the time frame, they also tend to fizzle out. And we've seen this repeatedly, whether it's PSU banks, even these OMCs, etc. So it's a bit of a punt that is there on expectation that something will happen. It is likely to happen, but if it doesn't, however, I don't think that it can be a long-term part of your portfolio, because ultimately in your portfolio, what you're looking for, or at least what I look for, are compounders, and one cannot play this. They are great for an individual trader, but I don't think as a portfolio you put it in on the hope that there will be something. Yes, if you see value, if you see great price, you see great trends, some of them do have it also, then it's great. But I wouldn't just play it for one event, which who knows, may or may not happen.
Where does leadership come in for 13,500? Sorry.
I think it's going to be quality. Again, most people are trying to say mid-cap, large cap, etc. I think it's quality. The pain I have seen in people's portfolios, and I meet them, large investors, every day, is so tremendous in that junk space where they're down 50, 60, 70%, that I don't think money is going to come into that. Yes, you will see pullback rallies, or you'll see oversold rallies, or a little bit of game, but money is going to move to quality, whether it is large cap, whether it is mid cap. So I think quality is what is really going to pan out. And you're already seeing that when the fall happened, as I was telling you that, okay, portfolios are holding out because you're in quality. And as and when the market reversed, the leadership that you found in this space was fantastic. So I personally think it's going to be quality driven.
So I know you're looking at the private banks, as is the rest of the market. What would be next in the pecking order?
No, I think there are a lot of other sectors we've spoken about, like something we've been overweight is specialty chemicals. We've been in overweight for the last 2 years. I think insurance is another very interesting sector, which you find that even when the market was falling, these stocks continue to make new highs. And even when the market is going reversed, you find that they still continue with their march.
So you're finding those value picks out there?
I don't think it's value. I think it's growth.
Growth.
Okay. I'll talk about
Okay, there you have it. That, of course, is Atul Suri talking about 13,500. That's the next target he's watching out for on the benchmark. But let's talk about today's movers and shakers. And for that, we have with us Swati Hotkar of Nirmal Bang on the technicals. And from our research team, we're joined by Pranay and Vivek. So good morning to all of you. Thanks for joining in. And let's kickstart the show with a brokerage recommendation. This one's coming in from ITC. Now, the stock, interestingly, has really not done much for any long-term wealth creator. You may have bought it at any price, but you will still see it's not really made money for you. But still, we do have brokerages maintaining their positive stance, their buy stance. Morgan Stanley has maintained an overweight. In fact, they are watching a target of 370 rupees. So significant upside from the current levels of around 250. They believe that ITC is actually the biggest beneficiary of that corporate tax cut. Yes, investors are still talking about that big bonanza from FM Sitaraman that was announced last Friday. They believe that the pricing flexibility has strengthened long-term prospects and hence they're extremely overweight ITC. But of course, don't forget that we are looking for that Suti divestment as well, which we at ET now broke first to you about day before yesterday, that the government wants to sell its stake in ITC and access via Suti. That should, however, be on your radar as well. But for now, it's Morgan Stanley's overweight stance. Okay, Swati, let's talk about ONGC. This is one PSU that really has not found itself in favor. A lot of PSUs have been buzzing on the back of the entire divestment buzz. This one has, however, stayed away due to the lack of the same. So what exactly is your recommendation here?
Good morning, Mubina. As of now, ONGC is not really performing very well. If you look towards the technical charts also, there has been continuous under the selling pressure, this particular counter from 170 levels to almost 110, 115 levels. As of now, from the last 2 weeks, we have seen that the stock has shown a very good bounce back rally from 115 to almost 140 level. Currently, it is just hovering near its 50 days moving average, and today it's on the verge of giving a breakdown of that levels. 130 is the quite good support level. I believe today it might break that support level, so one can go for short only below 130 levels, and upside I will just looking forward to put a stop loss for 135 levels for the immediate target of a 120 levels on the downside. So it's a short call from my end below 130 levels.
All right, sell call, and ONGC's target is now 120 rupees according to Swati. Okay, let's move on and talk about a new entrant on the Nifty, and that's Pranay Nestle.
Well, yes, so this was anticipated for the last 2 weeks, and as part of the semi-annual rebalancing on the index, now you're seeing greater weight being added to the consumer space with Nestle coming in, and Indiabulls Housing has been ousted, so the weightage of financial services also goes down. Though you're seeing Nifty tick lower by about 1% right now, it's already seen a very good rally ahead of this. And when it comes to this quarter's earnings, according to analysts, it's also expected to post relatively better results.
All right. Well, off the day's high, just left with losses of 1% for the Nifty, for the Nestle. But let's hope this one as well does not succumb into what we, do in jest call as the curse of the Nifty. But let's move on and talk about stock number 4, Vivek, Bharti Infra. Why is Credit Suisse optimistic on this one?
Well, Credit Suisse has been quite active as far as the entire telecom space is concerned, and also the telecom infrastructure space is concerned. While they are quite negative on the prospects of the entire telecom industry, where they're not so bullish as far as Airtel is concerned, Infratel is one particular name where they've retained their outperform stance. They've kept the target price quite high, 330 rupees a share, where they see the stock start to trade 1 year ahead. And what they're saying at this point of time, the core investment thesis remains the fact that the company actually offers a significantly attractive dividend yield, and which is why they believe that it's a preferred pick within the sector. And they also believe that tenancy, those kind of issues are now bottoming out, and they believe at this point of time it offers it's actually a great value pick as far as the telecom infra space is concerned.
Okay, so that's the Credit Suisse rationale for picking out Bharti Infra. We have been talking about the metal space being among the top sectoral losers, but interestingly, NMDC is bucking that trend. It's sharply off the day's high, but the key trigger, of course, is the big ET now exclusive. Sources say that the Nagarnar steel plant, which is, of course, something that NMDC has been working on, may now be getting the thumbs up from the government for a demerger. So the DIPAM has essentially floated a cabinet note for sale in NMDC's Nagarnar plant. Of course, the completion of the plant may take a little while more, 10 months, perhaps more. But do remember, it's a 3 million ton capacity plant, and the PMO seems to have given a go-ahead for demerger of this plant. So that's something that's acting as a key trigger for the stock price of NMDC. 93 now on the cards for this one. Okay, moving on. Swati, yesterday we had the OMCs buzzing away in trade. And while today most of them seem to be reversing course, HPCL is standing out. So what's your recommendation?
See, Mubina, technical setup of the HPCL is definitely very positive on the charts. The stock, the whole 2019 has been performing really very well in this particular counter. The chart shows that the counter is just trading in the upward rising channel. Also, the fact that it is trading above all the important moving averages, say the 100, 50 and 200 DMA. On the technical pattern setups, the stock has given the inverse head and shoulder breakout of 270 levels, and it has just on the verge of touching its 52-week high levels. So the overall setup of this particular counter on the technical parameters is definitely positive. I'm looking for a target of a 330 on the higher side, and the downside it's looking support at 300 levels, 300, 295. So those who are having any long positions, definitely they can hold on with the immediate target of a 330 levels, with the maintaining a trailing stop loss of a 295 to 300 levels on the downside.
All right, so I think Swati seems to be pretty optimistic on the stock. That's HPCL. Pranay, Z Entertainment, meantime, big loser today in trade. What's the trigger?
Well, we've seen that mutual fund borrowers have not really succeeded in having a standstill agreement, and SEBI is seeking some more information on that. That such kind of extension cannot really be granted by the lenders. So it's implied that SEBI is opposing it, and in a way that kind of agreement tends to shortchange the minority shareholders and investors. So that is something which is weighing on the stock right now.
4% gone now for Z Entertainment. Well, back with the metal space, which is the big sectoral loser. Vivek, JSPL.
Very interesting and important note coming in from Morgan Stanley as far as JSPL is concerned. What they've actually written on is the fact that they've gone ahead and revalued the company's international assets, and on the back of that, they've cut their target price by 37 rupees a share. See, what they're saying at this point of time, number one, JSPL is a high debt company, but what they're finding comfort in is actually valuation. So they're saying that valuations are quite cheap compared to its relative historic average. And what they're also saying is that despite the weak demand environment, they believe that at this point of time, they are expecting better profitability that the company has been showcasing so far to be able to comfortably meet any cash flow requirement and any debt repayment obligations that the company may have. So they have a positive stance on the company. However, they've gone ahead and cut the target price and their valuation multiples, which is why you're seeing the kind of cut or deep gash as far as JSPL is concerned.
Well, yes, and it looks like it may once again slip below that 100 rupee mark. In fact, in his very first television interview, Steel Secretary Binoy Kumar, in conversation with ET Now, says that he does expect an increase in steel demand over the next 1.5 years, and that the recent subs provided by the government will create demand for infrastructure, which will, of course, ultimately benefit the steel industry. Listen in.
I do look forward to a better time for the steel industry in the next 1.5 years, and particularly in the next half of this year, there will be an increase in demand, and to that extent, I feel that we should look towards the positive side. In the first half, there was a lowering of the demand, and to that extent, our people did have inventory. And but you know, the positive side was that, or has been, that people have shifted to exports. So last month in August, our exports shot up, and that is a very welcome thing, because otherwise we were importing and our exports were down more than 30-35%. Corporate tax reduction. Second, the housing. Third, the general environment in which our banking sector is operating. We in the government feel that there will be a further increase in the demand for construction, infrastructure, and automatically the demand for Indian steel will increase. We are also coupling that with keeping a very close watch on our imports.
Okay, that of course was the Steel Secretary speaking to ET Now. Let's look at the RWI small case, see what that one's up to, as we are in the midst of a cut witnessed on the benchmarks in the last day of the trading week. And yes, in line with that, we are in fact seeing underperformance via the RWI small case. Slipped below 550. It's a cut of almost about 0.6%. But today on The Money Show, here is what we have lined up for you. Come 29 September, it is World Heart Day. And that's what we on The Money Show want to celebrate, or rather create awareness about, This, of course, with respect to keeping in mind the sort of care you will have to take for your heart and for your wallet as well. And that's where heart insurance, that's a very specific category within the health insurance umbrella, kicks in. So we are going to be talking about that today on The Money Show. And also, over the weekend, we are perhaps going to kickstart all our festive season shopping. So we are going to give you a brief glimpse into what sort of sales are currently available, which categories go on the most sales, and we will be reviewing some of the biggest launches online and see whether they are worth the buck. All of this lined up on today's edition of The Money Show. Welcome back. You're watching Market Fatafat on ET. Now, let's quickly continue with the countdown. We were talking about the metal index, but some of its constituents are managing to hold out. NMDC was one. The second one is MOIL. The stock has, in fact, rallied for the second straight day. And if we look at it from a longer term, out of the last 6 days, we have seen the stock trade in the green for the last 5. Remember, we did have that upgrade from HSBC as well on the back of attractive valuations and rich dividends that MOIL offers. Stock continues to go higher, 6.5% up today in trade. Swati, REC, that stock on the flip side is trading in the red. What's your view?
See, Mubina, the overall view for the long-term perspective is definitely positive, but on the short-term parameters, if I look towards the pattern, on the weekly chart, it has given the breakdown of the head and shoulder pattern, which indicates a cautious signs at the current level. Also, the fact that the momentum indicators such as the RSI showing a negative crossovers from the higher levels. So at lower levels, currently it has just given a breakdown of a 135, 140 levels, which was the neckline of the head and shoulder pattern. So my view is cautious for a short-term perspective. I will suggest to create a short positions at the current level below 125 levels for a target of 115 with a stop loss for 130 levels on the high side.
All right, there you have it. It's a sell on, REC that Swati is recommending. And Pranay, meantime, Strides continues to trade with losses and fear of the ranitidine drug.
Yes, it's already fallen about 20% in the last 3 days. So a couple of days back, when we had data coming out after Dr. Reddy's also withdrawing the drug from the market, that Strides being one of the major players over here, perhaps could also have to do that since impurities were found in the drug. At that point, it continued to sell, but in the last couple of days when US FDA has asked it to conduct studies on the drug and submit the data in the next 30 days, as of this morning, it has decided to stop sale and supply of such drugs. And since it contributes nearly 10% to the EPS projections of the year as per analysts, that kind of impact is being felt in its stock right now.
Okay, Strides is more than 6% down today as well. So there's been a massive fall in the stock that we have seen. And Vivek, meantime, it's not just slowdown jitters, but now Brexit jitters that Tata Motors is suffering from.
Well, Tata Motors, not too much good news comes from this particular name. So what they're saying is that now they're going to have a planned maintenance shutdown. They're going to shut down their UK factory for a week in November, and this is mainly something that the company is doing to safeguard itself from Brexit worries. What they're also saying is that at this point of time, commentary is quite weak. They're saying demand is something that's not really coming in, and they're also saying overall in China, they aren't seeing too much demand coming in. So overall, given all of these uncertainties that surround Tata Motors, the stock is down 4.5% in today's trading session.
That's Tata Motors, 4% gone, once again below 120 rupees. Take a look at our all cargo logistics. The stock continues to go higher today as well in trade. In fact, in this last 1 week, we have seen the stock surge almost 11%. Now, couple of factors. Firstly, it seems to be in acquisition mode. Earlier, we had reports that all cargo is looking to acquire a stake in its rival Gati, and now it seems that it is in race to acquire Sikal Logistics. All of these logistics stocks have any which ways today been rallying in trade. All cargo is one of them. In fact, even if you look at a stock like a Snowman Logistics, small cap stock, that one too has hit a 52-week high. So lots of traction seen in this pack and trade. And Swati, along with that, we are also seeing traction in the insurance pack. Put your finger on any of them, even these PSU ones, New India, GIC, all of them are gaining. ICICI Pru is at a 52-week high. Your view here?
Definitely, Bubina. This is particular counter is really performing very well. High tops, high bottom formation. It just every day it's quoting a new 52-week high, which is very strong indications on this technical perspectives. I believe this rally is likely to be continued towards at least minimum 480, 490 levels, and whereas on a downside, as per looking towards the previous cluster supports level, it comes to at around 445 to 440 levels. So I believe that this particular counter is really strong. I'm looking for a target of a 480 level. So those who are having any long positions, they can definitely hold on with the immediate stop loss of a 440 for immediate target of a 480 on higher side.
Okay, that's of course Swati's recommendation on ICICI Pru. But with that, we are completely out of time, so we'll have to wrap it up on this edition of Market Fatafat. Thank you for watching.